Welcome everybody. We're going to give about a minute's grace here for people to get in here. Then we're going to talk about per diem in 2021. While we're waiting, if any of you have questions, start typing them in the question box. They don't have to be just about per diem. We'll answer questions on anything we can answer questions about, quite honestly. So, yeah, question us up. I think that one of our sponsors had invited some of you and said you can ask questions about anything, and so that's fine with me. If I don't know, I'll tell you I don't know. So like another 30 seconds or so and we'll get going. Okay, we ready to get started? Let's go.
All right. So welcome everyone. Today we're going to be talking about the per diem best practices. A little housekeeping for you. You have all been muted for the duration of the webinar. As Mike said, if you have any questions for us, please type them in the question box. Be sure not to click the black X because you will be exited from the webinar. Today's webinar is sponsored by Ascend TMS, the #1 rated TMS software. It is the easiest to use, and if you ever should need help, their training is unlimited and always free. We have partnered with Ascend TMS, so be sure to ask us about the special deals you can get. A little bit about us. We are a full-service payroll administrator designed specifically for trucking companies. If you have any questions about our services, please feel free to reach out to either Mike or myself. A little bit about Mike. He is the founder of Superior Trucking Payroll Service with over 20 years of payroll experience and a former CFO of a 75 truck fleet and brokerage.
All right, thanks Harley. Here's what we're going to talk about in today's webinar. We're going to talk about some of the changes to per diem in 2021. We're going to refresh our memory on the per diem changes from about 3 years ago with the tax law changes. We're going to talk about why per diem is really good for your trucking company in a lot of ways. And we're going to talk about sometimes you don't want to pay per diem, and we're going to talk about how to make the most of it. And again, questions and answers, ask us anything. Again, I don't promise to have all answers, but I know a bunch of people, so we can probably get you some help. Our mission here is to help trucking families, and so that's why we do these webinars. We have a number of people listening in today, watching today, that aren't even trucking companies, but they service trucking companies. I get to see who registers. So welcome to you guys. I'm glad you guys could make it too and share it with your people. That's what we're about. So let's get started here. What's changed with per diem? Well, as of October 1st of this year, the IRS now allows per diem of $69 per day for meals and incidentals for a truck driver in the continental United States while they're on the road. It was formerly $66. So it's $3 different, which isn't life-changing, but it's still, every little bit helps, right? Trucking companies have to watch every penny, and this is going to help them save a little more money. It's going to put a little more money in the driver's pockets. So you're gonna, if you're currently paying $66 a day, yeah, you want to contact your payroll people and let them move it up to 69. Take the most advantage of it you can. A question that we get a lot is part of one of the COVID relief packages. I think it's ARPA, but don't quote me on that. Is that meals and incidental meals at a restaurant are 100% tax deductible in 2021 and in 2022. I think is a way to get the restaurant industry moving coming out of COVID. So we get asked, does that make per diem 100% deductible now? Well, the IRS, as is usually the case, doesn't write laws specifically for trucking very often, and they didn't here. They've been pretty vague about it. The one thing they say is that it's not all meal allowances or everything. They say it's the money you spend at restaurants. It's not for food you buy yourself. So with that in mind, I talked to Troy Hogan over at Cat Sepper Miller. They're a trucking CPA firm in Indianapolis, and they're great people. They've done webinars with us before to talk about tax issues and things. And their advice, and I agree with it, is you should still consider it to be 80% deductible right now, unless the IRS comes out with a pronouncement that tells you that it's 100% deductible. And between you and me, I don't expect it to become 100% deductible. However, I don't predict anything anymore after COVID. Who knows what's going to happen? So that's a big deal, though. That would be a significant change, and I'll talk about where that comes in, being 80% deductible or 100% deductible in an example that I'll show you. But yeah, for now, I would talk to your tax advisor about it. Hopefully your tax advisor knows trucking if you're a company owner or deal with the company tax return. But right now, I would plan on it being 80% deductible until we hear otherwise. Now we're going to talk about what changed 3 years ago, because we still get a lot of questions about this. And part of why I'm rehashing, some of you might have seen this before, but I'm rehashing it because we asked you all when you registered about your per diem practices, and we didn't require a response. We're not trying to be too invasive about it. But as an idea here, 32% of the respondents that had trucks said they don't pay per diem and they have over the road drivers. And so I want to refresh this for them, because there's a huge savings opportunity out there for the 32% of you. Hopefully a lot of you are in the webinar right now. HR 1 was from 2018. It has a lot of different names. It was the big tax law change that President Trump and the Congress at the time put together, all those crazy changes that happened. It was a lot of different changes. And one of them was that people thought that per diem went away. And it did for people who itemized and took per diem as an unreimbursed employee expense if they were a W-2 driver. It did go away for them. The companies and the owner operators and those guys can still take per diem. That part didn't change. And so it's more advantageous now for the trucking company more than ever to pay per diem to the drivers. And that's the point I want to make here, is that it's still absolutely allowed. That didn't change at all. It was just, you'd see headlines like in trucking publications, oh, per diem's going away. No, per diem only went away for W-2 drivers that were claiming it on their own income tax return as an unreimbursed employee expense. For the rest of everybody else, nothing changed. Yeah, that's basically what I'm telling you here. So owner operators, small fleets, big fleets, all can deduct it, what they pay their drivers, or the owner operators pay themselves for per diem. It's just the company drivers cannot do it. And it was never as good a deal for the company drivers anyway, quite honestly. They were only getting about half the money back in the best of circumstances. They were still paying Social Security. A lot of times they were still paying state income tax on the money. So every state's different though. So let's talk about per diem a little bit here. I've got a link here to one of the revenue procedures. They send out new ones every year. They just updated it. Trucking companies can now pay $69 a day as reimbursement instead of wage for the drivers. And so that becomes a significant difference in how much of the driver's pay is taxed. It also becomes a significant difference in the payroll taxes that you as a trucking company pay, as well as the workers' compensation insurance that you pay. And you're going to find here that we're going to save you some money. It's the savings add up to be significant. So let me show you an example. As I say at the top of the slide here, per diem may not be 100% deductible. It used to be was not 100% deductible. I'm going to assume that it stays at 80% for this example. I used a 10% work comp rate for drivers. I know that work comp has gone down, but I just use a number. It's easy math, quite honestly. A lot of people have lower than that. You could adjust this number to make yours, or we'll do it for you. Reach out, put it in your question. Tell me what your work comp rate is, and I'll get you a number. And then a marginal tax rate because of the non-deductibility, and that's the highest marginal tax rate right now is 21% for a corporation. And then we boiled it down to one driver. The 42 cents a mile isn't right anymore, but that's just what I'm using. I know nobody's probably paying that very often, unfortunately, but that's a different webinar. Here's what the driver pay stub are. This is for the driver. Yeah, their pay stub. You can see at the top, they've got the gross wage of 10.50. That's the rate times the miles. Oh, sorry. I went, my bad. There we go. The rate times miles is 1,050. The per diem, we subtract it here. Right there with my bad John Madden telestrating. And so the driver only, when they pay per diem, the driver only has, oh, sorry, I'm sorry, this is the employer side. I'm all backwards. I'll blame COVID. Sorry about that. This is the employer side. The rate times the miles, still the same, the 1,050. If you pay per diem of $330, you have 720 in wage. And you can go through and you can see that you only get to deduct 80% of it. You go on down the line here to $66 in additional taxable income. So you'll pay $13 in tax on it, but you're going to save $25 just in FICA tax. You're going to save even more in workers' comp. You're going to come out 44 and change ahead per driver per week when you net all this stuff out by paying per diem. It's a lot of money. It does $44. You're like, wow, $44 is great, but I'm not going to get too excited about it. But what if you have 25 drivers? And this is per week, right? So at 25 drivers, you'd save $57,000 a year. And that's not savings like you're going to save 1/10 of an FTE if you use this new automated procedure or something like that. This is real money. You're going to pay, your bank account will be that much bigger at the end of the year between the workers' comp savings and the payroll tax savings. 57 grand. And that's even paying the highest marginal income tax rate, which hopefully you all are in the sense of that you're all making so much money, but if you're, that's for your tax advisor. But yeah, 57 grand on 25 trucks. It's over $2,000 a truck a year. That's significant. Where'd my next go? Sorry, my little next button went away. There it is. All right, this part's about the driver. Sorry about that before. This is 1,050 as we had before, right? That's the same. And then we take the per diem out just if you're paying it. So then the taxable wages are different. The FICA, the driver saves $25 in Social Security and Medicare tax every week. They save almost 45 bucks in federal income tax. I use somebody who is single and two, if it matters. I use the old W-4, but a lot of people still use them. And then I use Michigan state income tax. They save $14. Again, everybody's state's a little different, but I use Michigan. They're kind of average-ish for this stuff. At the end of the day, and this is the important part, at the end of the day, the driver gets an extra $84.12 in their check every week. Every single week they get they get $84 more. That's over $4,000 a year in money that they're net pay into their bank account that they're going to get that they weren't getting before. It's the biggest raise you're ever going to give them, probably. I know that the trucking market is crazy right now with rates. By the way, I used 42 cents a mile, which I know is super conservative. If you're paying 55 cents a mile, the savings is just even more because the federal income tax changes even more because it's a progressive structure. Everything else will stay about the same, but they could save $100 a week, $5,200 a year. It's fantastic. Yeah, where are the other benefits for this? This is a great recruiting and retention tool. In addition to all that pile of $57,000 you saved yourself with 25 trucks, on top of that, this is a great recruiting and retention tool. All of your recruiting media, all of your YouTube ads, your website, however you're doing it, Craigslist, Indeed, however, Facebook, always mention that you pay as much per diem as you can. The drivers that know what per diem's about will appreciate that. And the drivers that don't know what it's about, you can help them show how you're doing everything you can to get them as much money as you can. That's a win for everybody. That's only going to help your recruiting and your retention. It should lower your advances if the driver's getting an extra almost $100 a week. They shouldn't need advances as much. Now, some of you I can almost hear the laughter of some of you going, all our drivers need advances anyway. Well, yeah, but they should need them a little less. Hopefully that over time helps them. It improves morale. The drivers, we all know that driver staffing is a challenge, and a challenge is a very nice word for it. But if you can show the driver, look, we're doing this for you. Like, we're doing this because we want you it's in your best interest. That's only going to help. It's only going to help build trust between the driver and the trucking company, which is usually where it breaks down and why drivers leave, is they don't trust somebody, their dispatcher or the company or whatever. Any of you who interview drivers to hire them or meet with drivers before they hire them have been regaled with stories of how their previous company stuck it to them. They cheated me out of this, they did this, or whatever horrible things that they say that you did or the other company did. This is a way to kind of build some of that relationship back. There are downsides, like everything, to per diem. There's downsides to this. A lot of the savings comes from the drivers not paying as much Social Security tax, and a lot of the company savings come from the company not having to match that. So the driver will collect less at Social Security when they go to collect, assuming it's still there. I'm not trying to make a political statement, but if you're in your 20s, you're a long ways from collecting. So, there is going to be less there, but we all know that Social Security is not ideal math, and they should take that money and maybe do something else with it. I've seen studies about the effect of people living paycheck to paycheck and the use of payday lending services and things like that, and where a lot of people who live paycheck to paycheck end up spending a lot of money on those things, whereas if they had more money now, they wouldn't have to do it, which just cycles them into a better, if you can get them out of that cycle, it's just going to help their lives. It's kind of a different tangential subject, but it is important. Work comp claims are paid out at smaller amounts because it's net up per diem. I don't think that's going to bust anybody up too bad, but it's something I do want to point out. And then the payroll service, some of you are our clients and some of you do it yourself and some of you use somebody else. Whoever does your payroll needs to understand how to run per diem properly. We're happy to talk to you about it. We're happy if you do it yourself and you just want to understand it, we'll help you understand it. This is about education, it's not about sales. So, but whoever does it has to understand how to execute this properly. There are times when you don't want to pay per diem. These are some examples. It really comes down to when the driver doesn't want it. We'd all love to save that $57,000. We'd all love to save over $2,000 a driver in cost, but we don't want to lose any drivers. Drivers are hard to find. as we all know. I know I'm stating the obvious here, but if a driver doesn't want it, and I listed some of the reasons here why they might not want per diem, or sometimes, they just don't want it for some other reason that I can't even imagine. There's a lot of schools of thought on a lot of things right now, and it's not my object. I'll show them the math. I'll show them that they get an extra 80 or $100 depending on how much they get paid a week. But if they're like, nope, I don't want it, it's going to mess me up. If I advise all my trucking companies, opt that driver out of per diem. It's not worth it to lose the driver. It just isn't. A quick point on this middle part of this, trying to get a loan. If the bank doesn't understand, usually a letter from the employer explaining how per diem works takes care of it. Their underwriters don't understand per diem. They don't understand trucking. All of you who are in the finance side and have tried to get financing can understand what I'm talking about, because they don't understand it when you're trying to buy trucks half the time. So if you're dealing with a traditional bank or something like that, usually a letter explaining it helps. We have a letter. If you need it, reach out to us. Our contact information is coming at the end, but I've got a form letter that usually seems to get it done. The important thing here, never lose a driver over it. I'm going to underline that. Didn't try to cross it out. I'm just a bad telestrator. Never lose a driver over per diem. It's just not worth it. How to optimize per diem. I think this is an underratedly big deal. Again, according to the people who responded when you registered, 15% of you pay $69 a day going in. There were another 23% that pay a different amount. And if you're paying 66, I count you as good enough because you're going to fix it to 69. But some of you are probably in that 23%. 24% pay by cents per mile, as in they pay, say, 40 cents per mile wage and 9 cents a mile per diem. 6% pay as a percentage of pay, as in, like, 2/3 of their wage is wage and 2/3 of the rate is or 1/3 is per diem. That's an example that everybody uses different numbers. And 32% of the people who responded that have trucks don't pay per diem at all. So I wanted to kind of talk about this a little bit. Per diem is Latin for per day. So the IRS allows $69 a day. They do say you can pay it as cents per mile. You can pay it as percentage as long as the amount never exceeds $69 a day. That's a pretty tricky tightrope walk there. If you try to be safe and say, I'm only going to pay 5 cents a mile per diem, which is going to amount to, say, 25, $30 a day for an over-the-road driver who's driving through the prairie, you're shorting yourself. You're shorting the driver. You're shorting your own trucking company savings that are on the table. And if you go, well, I'm going to be more aggressive and I'm going to pay 13 cents, 14 cents, 15 cents a mile for per diem, or I'm going to pay 40%, 45% of their wage, if you want to use percentage. If you're going over $69 per day, you're outside of compliance with the IRS. And we all know DOT compliance is just a bag of fun. IRS compliance is every bit as horrible. So it's not worth it to go over. I know we have clients that pay it as percentage. We have clients that pay it as cents per mile. We have clients that pay it all the different ways, and we help our clients however they want to pay their people. But it's just not. It's the best way to do it is $69 a day, right on the number. You're going to maximize your savings. You're going to maximize your driver's financial well-being by paying that number. The excuse that we hear, I call it an excuse, you can call it a reason if you want, is our dispatch software won't let us do it, or our PEO won't let us do it. They require us to pay it as cents per mile as a separate pay type or something like that. There's too much money on the table. You figure it out. You can work. There's always workarounds. Talk to your software provider. Talk to your PEO. Tell them, no, I'm paying $69 a day, and that's just how it's going to go. You got to figure it out, because there's just so much money. And it's just the idea too that you're doing the most you can for your drivers at a time when it's hard to find drivers. I know I'm preaching to the choir, but it's really important that you do everything you can for them, because somebody else will if you don't. So with that, We're going to go to questions. Again, keep typing those in there. There's our contact information. I'll look at the question queue a minute here. I'll give you a second. But the first question I always get is, will the slides be made available? And the answer is yes. We will email all of you the webinar slides without my horrible telestrating on it. And we'll send those out to you probably later today, tomorrow at the latest. Also, this video is being recorded with my bad telestrating, and we'll put that on our website so you could watch it again later and skip to your favorite part. So that's the first thing. I'd also tell you the links at the bottom are pretty helpful, good ways to find us. The truckingpayroll.com/blog. We write articles once or twice a week, and we put them there. There's a lot of helpful stuff there. It's all educational. We try to answer people's questions, which is why I always encourage questions, and it's not too late to add one in there. You know, the questions that we get asked become articles, and we're always looking to write more articles. So if you've got a question about anything related to trucking and payroll, you know, you can type it in now, or you can email us later, or call us, it's fine. Any of those are good. One of the articles we wrote very recently was about a driver recruiting and retention technique of paying twice a week or paying more often per week. And then I saw on Twitter a couple nights ago, there was a trucking company that was recruiting, and they pay on Tuesdays and Fridays. I think that's a dynamite idea, and low cost idea to improve your truck driver retention and recruiting, because for them, it's kind of a receivable. You know, they do the work the one week, they get paid the next Friday or the Friday after, and they have to wait for the money, which I understand that sometimes the employer's got to wait for money too. But at the same time, man, we could do some, if you pay them sooner, you can really keep them around a lot longer. I've seen discussion about, and I'd love to have this discussion with any of you that are interested. I'd love to talk about that more. I've heard people say that teaches the drivers to have bad financial habits. Well, they're already paying the price for that with payday loans and with finance charges on credit cards and things like that. So I talk about it in the article. I love your feedback on it, though. I do have a couple questions here. Harley, I'm just going to grab them. Can W-9 employers use per diem? And I think, and please correct me if I'm wrong, but I think what you're asking is people that you pay by 1099, so people that give you W-9s, can they use per diem? Well, if you're paying them 1099, which we have look in our webinar archive too about whether you should 1099 or W-2. If you're paying them by 1099, you as a trucking company can't pay per diem to them. And you wouldn't want to, because it would make deductible wage not deductible for you, and there's no payroll taxes or work comp to get out of. So there's no benefit to you there. But the people that you pay, the people receiving the 1099, and I'm assuming they're legitimate owner-operators, have their own truck, pay for their own fuel, all that fun stuff, they can deduct it on their tax return. Or if they pay wages to themselves, maybe they're an S corporation, I don't know, they could pay it that way. But if you're 1099ing them, you can't pay them per diem. But that's a great question, because some people are not clear about that. So thank you for asking that. Then I've got another one here. What types of payroll driver pay software would you recommend when showing the drivers their weekly pay settlement sheet that we can use? All right, that's a great question. Okay, what types of payroll driver pay software? So you're talking about showing, I assume, Abdi, and I hope I'm saying your name right, that you're talking about, okay, these are the loads, you got paid for this load from A to B. You went from Dallas to Atlanta, and it was 1,200 miles, and we paid you 50 cents a mile, so you get $600. And then you went from, Alpharetta, Georgia to Chicago, and that was 800 miles at 50 cents a mile, so you get $400. You're talking about that part of the settlement sheet. Your TMS software, okay, good, yes, along those lines, awesome, thank you. Your TMS ought to be able to do that for you. it should be right baked into there. They should be able to shoot out settlement sheets. Ascend is able to do it. Harley talked about them at the front of the webinar. Ascend is great. We're working on something really cool with them to make your payroll really easy. Another way you can do it is if you have for our clients, if you have the data like in an Excel sheet or some sort of exportable file, we can take that data and put it right on the pay stub. We can put it right on the bottom of the pay stub, and it says, they went from Dallas to Atlanta, and then from Alpharetta to Chicago, and each load would be its own line item, number of miles, rate per mile, here's your pay, or whatever, or cut deductions or whatever you have. It's all customizable. But the settlement sheet should come from the TMS software. TMS software is not as expensive as it used to be. When I got into trucking, TMS software required you to buy a whole server and have a server rack and an IT person on staff and all of that stuff. And now it's all in the cloud. It's like everything. Technology's gotten so much cheaper. So I think Ascend is like 80, 90 bucks a month per user, and one user, as many trucks as you want. And it's full everything. If your clients of ours, get 3 months free with them. Let's see, sorry, Abdi got back to me. Yes, we use Excel sheet, but we want to make more powerful. That helps with saving that information for us. Yeah, your TMS should be able to do that. Definitely check out Ascend, ascendtms.com. I would check them out. There's other good ones too. Just to be fair, there are other good TMS providers as well. They're not the only game in town, but the settlement sheets. If you want, Adi, I'll send you one of their settlement sheets if I can find one, and you can see if that's something more like what you're looking for. But they're going to end up sending that settlement sheet to us. Ultimately, they're working on it. They're going to send it to us electronically, and we can pay your people and put it right on the sheet for you, which is going to be really cool. Like all technological things, it just takes twice as 3 times as long as you want it to. But I think if there's no more questions, we try to do half-an-hour webinars, and we're at half an hour right now. So with that, we will end the webinar. If you have any feedback, we'd love to hear it. If there's any webinars you want us to do, things you want to learn about, we're always looking for topics. We're always looking for articles to write. We want to help. We're here to serve trucking families, and that's you guys. So whether you're a client of ours or not, doesn't matter. We're here to help. So please reach out to us. I think I got all the questions here. So with that, thank you for attending. Look for another webinar next month, and enjoy the rest of your day.